Did you know there's a secret $1 to $2 trillion trade that's been quietly pumping up US stocks, crypto, and basically every risky asset on the planet for the last 15 years? It's a financial force so powerful, most people have never even heard of it, yet it's shaped the markets in ways you wouldn't believe. Behind the scenes, this trade has been fueling massive gains and creating hidden risks that are only now coming to light. It's called the yen carry trade, and it's dying as we speak. This isn't just a technical shift, it's a seismic event that could ripple through global markets and impact your investments, even if you've never traded a yen in your life. In the next 10 days, we're getting a Federal Reserve rate cut, and a Bank of Japan rate hike at the same time. The perfect storm to blow this thing up. These two moves, happening together, could trigger a chain reaction that unwinds years of market momentum in a matter of days. Stick around, because by the end of this video you'll know exactly what's happening, why it matters, and what you should do about it. We'll break down the mechanics, the risks, and the opportunities so you can stay ahead of the curve. What's up everyone, welcome back to the channel. Today we're diving deep into the yen carry trade, the trade that fueled the everything bubble and is now unwinding in real time. Smash that like button if you're ready for some macro chaos, and let's jump in. Imagine this. You borrow money in Japan at basically 0% interest, you swap those yen into dollars, then you buy US treasuries paying 5%, Apple stock, Bitcoin, whatever. You pocket the difference. That difference is called the carry. For decades, Japan kept rates at zero or even negative, so this trade was basically free money. Hedge funds, Japanese housewives, yes, really, they're called Mrs. Watanabe, pension funds, everyone piled in. Estimates say the total size is anywhere from $500 billion to almost $2 trillion. That's bigger than the GDP of most countries. This trade loves two things. 1, a huge interest rate gap between Japan and the US. 2, a steadily weakening yen, because when you eventually pay back the loan, a weaker yen means you need fewer dollars to buy the yen back. Win-win. But here's the problem. That perfect setup is collapsing in December 2025, and the financial world is bracing for impact. The conditions that made everything work so smoothly are suddenly unraveling, and the warning signs are everywhere. First, the Federal Reserve is expected to cut rates again on December 11th, probably 25 basis points, taking the Fed funds rate down to between 3.5 and 3.75%. This move is meant to support the US economy, but it also means borrowing in dollars gets even cheaper, and investors are forced to rethink their strategies. That shrinks the interest rate gap, making the once lucrative carry trade far less attractive. The difference the traders relied on is quickly vanishing, and the market is starting to feel the pressure. Second, and this is the big one, the Bank of Japan is almost certainly hiking rates on December 19th to 0.75%. This is a major shift for Japan, signaling a new era for its monetary policy. That's the highest Japanese interest rate since the 1990s. For decades, Japan's rates have been near zero, so this move is sending shockwaves through global markets. So the US is making dollars cheaper, Japan is making yen more expensive. The carry is disappearing fast. Investors everywhere are scrambling to adjust, and the financial landscape is shifting right before our eyes. When the carry shrinks, the trade stops making sense. Traders have to unwind, sell dollars, buy yen back, repay the loan. That forces massive yen buying and dollar selling. We saw a preview in August 2024 when the BOJ surprised everyone with a hike. The yen rocketed 10% in weeks and global stocks cratered. Here are the 5 big dominoes that fall when the financial winds shift. First, the yen skyrockets, sending shockwaves through global markets and catching traders off guard. The USD to JPY is already breaking down toward 153, a level that's making investors nervous and forcing them to rethink their strategies. And the next stop could be 140, a move that would ripple through currency markets and impact global trade flows. Second, Japanese investors start repatriating money, bringing their capital back home in a rush to protect their assets. They actually own about $1.1 trillion in US treasuries, making them one of the largest foreign holders of American debt. If they sell even a fraction of that, it could trigger a chain reaction in the bond market, unsettling investors worldwide. US yields can spike higher, putting pressure on borrowing costs and shaking up portfolios everywhere, even while the Fed is cutting rates in an attempt to stabilize the economy and calm the markets. Third, global stock markets could get hit hard, with volatility spiking and investors scrambling for safety, especially those high-flying US tech names, and anything that's leveraged, as risk appetite dries up almost overnight. August 2024. Flash Crash 2.0 might be loading up right now. Fourth, crypto gets smoked because, well, a huge chunk of crypto leverage is funded by yen loans. When the yen surges, that leverage unwinds fast and digital assets can tumble in a matter of hours. And finally, risk off everywhere. Emerging markets, gold. These are the canaries in the coal mine, signaling stress before it hits the mainstream. It's kind of like pulling the plug on the world's biggest liquidity bathtub, draining capital from every corner of the globe and leaving markets exposed. Now, before you panic sell everything, no, this is not another 2008. Back then, banks were blowing up. This is really just a giant funding trade unwinding. It's painful, but not necessarily systemic. The Fed still has plenty of ammo, and the Bank of Japan is moving very slowly, on purpose. But short term, December and January could be extremely volatile. So, what can you do right now? If you're long risk assets with leverage, maybe consider taking some chips off the table or hedging a bit. The yen itself, or yen ETFs like FXY, has actually been one of the best trades of 2025. Gold and quality bonds can act as shock absorbers. Cash, or short-term T-bills, are suddenly your friend again. And hey, keep an eye on December 11th for the Fed and December 19th for the BOJ. Those two dates could decide whether we get a Christmas rally or a Christmas crash. Alright guys, that's the yen carry trade in a nutshell, and why the next few weeks could get wild. If you found this helpful, destroy that like button, subscribe, and hit the bell so you don't miss the follow-up when the BOJ actually pulls the trigger. Drop in the comments. Are you worried about this unwind, or do you think markets will just shrug it off? Thanks for watching, stay safe out there, and I'll see you in the next one.